Okay. So, all right. So let's get started. I'm gonna share this canvas. So why do I want to do this? So just as a disclaimer, I do not claim to be an expert on co-living, pad split, or real estate investing. What I'm doing here is I'll tell you about my background. What I'm doing here is I am just sort of giving you my experience with a successful pad split. Um, Maybe if you have questions, we can talk about my unsuccessful experience, which was not with pad split, and which is the unsuccessful experience is led to the successful one because of what I learned from the unsuccessful one. So I just wanted to share it because I find that that there's so much on sort of the interwebs on the that talks just about these magic 3-minute videos, the walkthroughs, the flashy sort of graphics, but nobody really kind of says what like the steps are, all the little tiny things, at least in a way that I kind of felt was useful. So let's see. So I wanted to just walk through the whole thing. So I put all this presentation together. I'm gonna share my screen here, and we'll go through the whole thing. It should take about 20 minutes, if that, and then we can ask questions. There we go. All right. Okay, so let's. This is, by the way, that QR code is my sort of all the links. I have some. I've been putting up videos on YouTube and just like experiences. Like every time I screw something up, I try to talk about it. And every time and I think that's more important, I think, than talking about the successes because there's plenty of people talking about how good they are and things. I think it's good for people to see when things don't do well and just kind of have a general sort of, I'm into like being as real as possible. So, okay, so quick, who am I? So I am by day I'm a night intensive care and doctor. So I was part of a private practice, and that private practice owned businesses that was like part of it. But we mostly worked with a contract in the hospitals. And during the pandemic, right in the peak of it, when all of us we were working in the ICU, we were getting slammed. The big corporate health system sort of told us that you have to come work for us, or you can't be work in our hospitals anymore. We had to become employees, and that sort of completely destroyed the practice. And then we all became employees. And what was concerning for me was how fast it happened, right? So at any moment, this we all, I live at the whim of a sort of a soulless corporate overlord that can then come in and say, okay, we're going to cut your salary, we're going to get rid of you, whatever it is. And so I didn't like that. So I wanted to start finding other ways to have independence. And I don't have to tell all of you about the benefits of real estate investing and how important it is. I mean, there's really only three ways you can get wealthy from what I hear. You can either that you can do on your own, right? Like, I guess you can, not including inheriting it, but you can have intellectual property. Like, if you come up with code or with some sort of, trademark or something like that, you can buy real estate, right? Or you can buy our own businesses, okay? And so real estate was the one that I seemed to understand the most. It was the simplest for me. So that's what I got into it. So I'm trying to accomplish, I'm not trying to become super rich. I don't really think I don't think I'd enjoy being rich. It'd be too sort of, I don't know, uncomfortable for me, but I am trying to have freedom and the ability to kind of be in control of my life. If the hospital system comes and tells me, you know, you have to do X, Y, and Z, I can say, I'm sorry, I'm just gonna cut back or drop out or whatever. And I have that sort of flexibility. So I have something that maybe my kids could get into when they get older, that can help me in retirement. And so that's brought me into the real estate investing. But as we've come along, it's been very difficult over the last couple of years because of the high interest rates to really do anything successful with regular sort of traditional rentals because of how high your PITI is in general. So I think it's funny. Like, I think that pretty much anybody who invested between, I don't know, like 2012 and 2021, if you started at any point and then you pretty much were a real estate genius, and your genius came from the fact that we had record high appreciation and record low interest rates. So it was really hard, I think, to not succeed in real estate when you had such a giant wind at your back. And then that kind of all came crashing down when the interest rates went up. and then the cost of the house and the houses were had been appreciating for so long for so much that it was hard, and so it became very difficult. So co-living was an opportunity to find ways to it's an opportunity to find ways to create more revenue without having to sort of invest in the expenses of multifamily, right? So, it's difficult to get into multifamily. It's a whole different type of investing. You have different kind of long-term debt. So this way, I can have a 30-year fixed debt on a house, right, which has essentially 6 tenants. So it's essentially a 1 bedroom apartment multifamily, but it's in a single family home, and that has huge advantages. It's also hugely advantageous because there's so many people that are not going to be able to afford housing as it became so expensive, and so it provides a huge opportunity to help people with affordable housing. It creates a huge it fills a huge gap, right? Because the housing crisis in America, the cost of living issues is simple supply and demand, right? There's not enough houses, right? And so most governments will do everything in their power to fix the problem except for build more housing, right? You have to go through all kinds of regulations, red tape, and there's all kinds of difficulties, and it's expensive. And so to build all these houses, it's going to take time. And so co-living is a way that you can provide housing for more people without building more housing. You just take a regular house and you just make it and convert it into something that can house more people. So it solves a huge problem. And I think we should invest in it for multiple reasons. One is I think it's more lucrative, and two, I think it provides it's a more giving way to invest in real estate. You're really helping a lot of people. Um, I I got the property manager for this house I'm going to talk about just called me and said, like, oh my gosh, she just got messages how grateful the people are to have a place, right? So like there's a guy, he's divorced, he's in his like 50s, and he's a regular working guy. He became like the house dad, right? He takes care of things. He'll call the property manager. He's like fixing things if he needs it, and he's taking care of all the other tenants. There's an older woman who the same kind of thing, like she's on her own, and for her it's just so valuable that she can live in a house where she doesn't feel like she's by herself. Like there's people that can be there if something goes wrong. She doesn't feel alone. So it's a hugely sort of meaningful way to invest, and I think that that's very important for me. Anyways, it gives me like I feel like I'm providing a very good service where everybody wins. There's some young guys there. I remember there's a young guy in a couple of the houses, like in one of the other co-livings. There's a couple of young guys who, they're just sort of getting started with their jobs, and they don't know if it's going to last, and they don't want to sort of sign a 1 year lease, and they don't want to commit to sort of security deposit, all this stuff. So there's just so many advantages to the co-living model. And it was surprising to me, I think, just because I was sort of, I had kind of tunnel vision. Like I just had never, I never considered co-living because the last time I was renting, like when I was in college and just after college, like it was pretty cheap to rent an apartment where I was, and now it's like 3 times as much. And I don't know what I would have done then. I would have considered something like this if I had the opportunity. So that's the beauty of co-living. That's why I'm getting into it. That's why I think other people should go into it. I think it's a great opportunity. Okay, so where did I get this deal from? So what I've done is I have help with somebody who's Julia. She's the operations manager, and she helps me. And we build relationships with wholesalers. So we're looking for creative finance deals that are brought to us by wholesalers. So I've been building these relationships for the last couple of years, and they do really hard work. Like wholesaling is a very difficult job, and God bless them. I'm happy to give them the assignment fees because they earned it, and they can find the good deals, and they can bring me the deals, and then they send them to me, and I will evaluate them. So this one came from a wholesaler in the sub-2 community, and he connected me with the seller, and I actually helped him with the sort of the deal structure and the negotiation. So he needed a little bit of help, and I'm happy to do that if it gets a good deal. So that's where this deal came from. So then how do I go about underwriting? And I go about underwriting the same way for all deals. Long-term rentals, I have a short-term rental, I'm looking at mid-term rentals. Essentially, I can't do a full deep underwriting for every deal because there's like 100 coming in, and it would take forever. So what we do is, so Julia and I, what we do is we do use rough estimates. So we do a first pass, right? It's a first pass 30-minute underwriting, right? And we will use, I have a spreadsheet that's like you just plug in the numbers. We'll get all the information. So I'll use rough estimates from Rentometer, Zillow, Data.Rabu, etc. Right? You can use from pad split, you can use the the weekly rates to figure out, and that gives you the rough estimate. I'm going to get details from about the house from the wholesaler. I'll use PropStream to get other details. And then I get the financials. Usually the wholesalers will send you the financials. Most important would be the mortgage statement to find what the actual PITI is and what the balance is, what the rate is. Okay, and then I'm going to, again, do rough estimates for the cost of entry. The cost of entry includes multiple things. It includes any money you give to the person who sells it to you. It includes any arrears, if you have to pay off arrears. It includes repairs. It includes closing costs. It includes assignment fees. It includes commissions to agents and holding costs, meaning, you have to budget for 3 or 4 months where you're not getting any income. Okay? So that's all the beginning. And from that, I can get a general profit and loss estimate. Okay. Now, I'm not going to sign a contract based on that, but that gives me an idea. Do I need to look further? Most of the time, 95% of you can throw out because the numbers don't work out, or the house doesn't look right, or you don't have the right sort of team set up to make it happen. So the next thing I do is I do the second pass, or the second, third, fourth, or fifth pass, right? So I'll take those numbers, and I actually believe strongly is that you have to call experts on the ground to give you the best estimate. So I'm talking about agents, local contractors, handyman, property managers, and property managers. It's important that they be sort of exit strategy specific. So you got to find a short-term rental property manager to give you the short-term rental estimates, and a midterm rental, and a co-living, and a regular property manager. So you want to make sure that it's the right, you don't want a regular property management company like the big corporate ones. They'll tell you, oh yeah, we can handle this. We could tell you the estimates, and they're just looking at sort of AirDNA, right? Because I don't want AirDNA. I can find AirDNA. I want somebody that can look at that. Like, I'll give you an example. I'll give you some examples, including these two. But one was, somebody just showed me a short-term rental that's near another one I have, and it looked really good. Like, it was a beautiful house, great street. But then I showed it to the property manager. Property manager said it's a great house, but there's a couple things. It's in the Georgia mountains, and these houses are close together. It says people want to go to the Georgia mountains to be in the middle of nowhere. So they don't like being in a place that's close together. It's not, and it's also not near the river, and it's not near the mountain. There's no views. And so even though it looks good on paper and the data Rabu numbers were good, he said you'd have a hard time filling this house. And that's something that you would only know if you were sort of local and you knew the little nuances. Another example, we had a Pittsburgh house, also beautiful pictures. Everything worked out. It actually was going to work as a long-term rental. So we actually paid a handyman to go out there because we were about to close on you sign the contract. And he went there and he's like, this is like a disaster house. It doesn't show in the pictures, but it reeks. There's like cats everywhere. There's mold in places. And so that $80 probably saved us thousands because somebody on the ground can look at that. Now, I prefer handymen to do this because a contractor has a conscious or subconscious vested interest in finding big things to fix, right? So the contractor might give me an estimate because he wants to change this and he wants to fix that and all that stuff, and it's going to be X amount of dollars. Whereas the handyman knows enough about all these things to tell you, you don't really need to fix that. That's good. This is a problem. And they know enough about houses, and you can pay them by the hour, and they'll give you an honest assessment because they don't have anything to gain by it other than a good relationship. The other example I think of local property managers is in Florida. There was a house we were looking for in Central Florida, like near Tampa, and the numbers looked really good as a long-term rental. We used Rentometer, and the spread was like $450 based on the last 12 months of rental data. So I do what I did. I called 2 or 3 property managers, and I got a hold of one. He told me an estimated rent that was $500 a month less than what Rentometer and Zillow told me. And I asked him why, and he said that what happened is that when they had a big hurricane come through, and all these people's houses was messed up, so they all rented houses while their primary residents were being fixed up. Okay. And so what happened is that drove up rent rates because a lot of those were paid by the insurance companies. Okay. And then all those people's houses got fixed, and they had started moving back. So the rent demand just fell off a cliff, and the rent went down, and it made it so that it was not a cash flowing property. Had I not made that call to the person that's local, I would have never known that. There's no way you could figure that out from the calculators, from the 12-month rent data. You had to have somebody who knew that sort of specifics about that market. So I think it's important to find people who are in the market, who have experience, and who know these sort of like little tiny details. With a co-living, you have to remember in your underwriting that you have to pay for all the utilities and expenses, okay? So obviously electric, water, internet, but remember pest control, right? You're going to have to pay for smart locks and cameras on these doors. We could talk about those in a second, but those have a monthly sort of monitoring fee or whatever. And then snow, right? Snow maintenance. If you guys in Florida and Louisiana know about this, but also you guys have to worry about lawn maintenance, right? And the grass grows year round. I remember I lived in Georgia, year round it grows, and so you got to constantly mow the lawn, and that needs to be taken care of. So make sure you include that in your underwriting. Okay, any questions about that, by the way? Let me see if I can, maybe in the chat, you can throw a question in the chat if you have any questions about sort of how that's essentially, that's my process for how I sort of manage kind of everything. Like that's how we underwrite or evaluate every property. The nuances would be sort of just different in terms of what kind of property is, where it is, and what the exit is, but that's pretty much the process. Okay, so let's talk about this house specifically to give you an idea of the numbers and how we approached it. Okay. Um, oh, so what? Adela, is what the calculator I use. So I created my own spreadsheet, and I use the calculators for. I will use basically the online calculators for estimated rents and stuff like that for the first pass, just to get an idea. And so that's what I use for those, and then I created my own spreadsheet for that. Okay. So again, if you didn't sign in the beginning, the QR code is for all my whatchamacallit, my social medias and contact if you have any more questions. So this house, the numbers of this one. So let's talk about this house. So this house is a house built in 1940. So it's a 4.3. It's 1,900 square feet. It was in very good condition. What happened was this was bought by a guy, and he had completely remodeled it and was renting it as a long-term rental, but he was getting married, right? And he was Indian, and Indian weddings are apparently very expensive and they're very elaborate, and he needed cash for the wedding. So he was willing to do a sub-2 deal for this one. So we took it over subject to, and he got his money to pay for his wedding from the down payment. The neighborhood is like a B minus, C plus kind of neighborhood. Although B minus in Baltimore is like a D a lot of places, right? But it's fine. People are used to it. Like everybody needs a place to live. It had a new roof. It had it's like new appliances. It was in very good shape. I didn't have to do any remodeling for the house itself, but I did have to add walls. But that's all I had to do. So this was the price, and it was undervalued, and this was the mortgage balance. So we calculate all this stuff, and this is the difference. So I think we got it at total all in a little bit above the value, like $5,000 above value after you count all the entry fees. Maybe actually a little bit undervalued, I think. Still, it was still undervalued, and so we take over his mortgage balance. I'm paying his mortgage company every month, his PITI. Okay, so this is why co-living is amazing. So we did the numbers. So as a long-term rental, it would bring in 2,200. I needed to use a PML for this, right? So if you calculate the whole thing, like the management at war chest means sort of maintenance, vacancies, stuff like that. I would have been negative $208 a month using a PML for this house. Okay, so that's a bummer. Now, as a co-living, we added 2 bedrooms. So we went from a 4-bedroom, 2.5 bath to a 6-bedroom, 2.5 bath. Each one of those rooms gets about, it ends up being about 700 to 750 a month. Like Pat does it by the week, so it's kind of weird, but 750 a month or so. 700, 750 a month. So it brings in 4,200, right? Now I have to spend more on management because that includes the fees to pad split. I have a second manager. I should say this. I don't use just pad split because pad split is essentially just marketing, tenant placement, and then rent collection. It has a little bit of a background check, like it does, and then there is a little bit of an incentive process where there's like reviews and there's an incentive for them to behave. Um, but pad split's relatively new in Baltimore, so there's a lot of people applying that don't have a lot of like history. But I have a property manager and she charges me an additional 8%. And she's amazing, worth every penny. So it's not the full long term rent, but she does all the turnovers, right? The turns, and she does all the maintenance issues. And she does a second level. This is really important. She does a second level of, of tenant screening. So she checks the court records for eviction filings, and she checks a second level criminal. She has a criminal background check, and she will call and speak to them also, right? And so it's a really, really important thing because when you have a co-living situation, you have to be more strict with screening because you have to deal with everybody getting along with each other. You don't want one person. I had that in my co-living nightmare was the lady I the I sort of violated one of the laws of landlording, which is never inherit tenants. Um, so I did, and she was a nightmare. And then she like convinced all the other people not to pay and taught them all the tricks of the legal system and stuff like that. And so you have to have, and one person so can really sort of one bad apple. So doing that second level of screening is huge, right? It's so important. So she does that, and she's amazing. And so, but it costs a little more. Utilities cost more, PML, but even with that, it's still net at full about $800 a month. That's after paying everything, right? And so it's like this is the difference. This is why, as an investor, co-living is so much better. It also is a little bit of a hedge too, right? Like let's say your vacancies are a little bit hedged, right? So, for example, the one I have in Denver, it's it has 5 bedrooms now. We're adding 2 more, but we're having some delays in getting the contractor to get the extra 2 bedrooms added. But the manager is able to put 5 people in those 5 bedrooms. So my holding costs are much less because I am getting some revenue. So if you have a vacancy in a long-term rental, you're getting nothing, right? If you have a vacancy in a co-living, it might be 1 out of 6 rooms or 2 out of 6 rooms. So you're not necessarily making money, but you're not losing like you would be with a long-term rental. Okay. All right. So again, we talked about this. I need it confirmed. So that's what I did. I called the property manager. I got a handyman out there. I confirmed the revenue estimates. I checked out the house. I also talked about like how easy it's to fill the house, because that's another thing with pad split. You want to make sure that, or any co-living, is you have to ask the question, like it's like kind of like short-term rentals, midterm rentals, like how easily could you fill this house, right? And she's like, oh yeah, like there's huge demand, right? But if you're in a like maybe a rural area or a place that's not such a great location, and you don't if you don't have demand, then it's going to be a problem because your expenses are higher. Okay, so I got 3 or 4 rehab estimates. This house did not need a lot of rehab. It did need some waterproofing. Um, so so this is when we got to closing. So we just did we got all the estimates, all the numbers checked out. So that's the best you're going to get, unless you have a prophet telling you that everything's going to be perfect, which some people will not do anything until they know like 100% for sure. You're never going to know 100% for sure anything, but you can do the best you can. So on the documents, you have to double check everything. So on another property I did a YouTube video on this, like the transaction coordinator had put the wrong numbers on the promissory note. For it was a hybrid for the seller finance portion. I had my very first deal, they put the wrong county and they had the wrong LLC. So you want to make sure like all the canned paragraphs, right? Like the stuff that's on every document is less important. And anybody who tries to read that, your eyes go cross, you get a headache. But it's just all like legalese, which, by the way, legalese was invented by lawyers so that you need a lawyer both to write it and to read it. But there's no reason they can't make these things make sense. but you have to make sure like all the numbers that are fit with what you had for underwriting and for you had on the mortgage amounts, and make sure that the address is right, the county is right, all those details you have to double check against your spreadsheets, double check the address and all that stuff. That's what you do at closing. Then you sign the documents. So that's what we did. So when we did the rehab, so there was evidence of water damage, so we had to waterproof the house. And then what we did is we had essentially, this house was nice. The basement had this like alcove, which was the size of a bedroom. So we had to put one wall in the basement, and then we turned the living room into a separate bedroom. So on these pad splits, people don't need a lot of living space for the sort of the affordable housing co-living. As an aside, there is a whole sort of strata of co-living, which is like high-end co-living. Like, for example, there's a company called Alcove that's in some cities in the Southeast. And my property manager in Denver does this also, where this is not for low income housing. This is for people who are young and indecisive, which most young people are indecisive, right? So you get these kids out of college and they don't want to sign a lease, they don't want to commit to a job, they don't want to commit to anything. So they will rent for like $1,000 a month a room in a house, and they have a little bit of a social scene as well for them. So a lot of people have turned short-term rentals into these co-living for high end, but they're much higher end. Like they have to be much higher end. So you wouldn't do that in one of those. But in these pad splits with the affordable housing, people don't need a living room. All right, they usually stay in their room. They go to work. The common area is usually off the kitchen. They don't actually have a lot of. They're not very needy, or they don't demand very much. Okay, so now after closing and beyond, okay? So we got the underwriting, we double checked all the numbers, we got through closing, we did our rehab. Next thing is you have to set up your pad split, okay? So we used Vivint. That's because that's what the property manager has used. She liked it. There's other ones you can use. I mean, Google Home, whatever. I think ADP, whatever. But the key is you have to smart locks. I think, in my opinion, are a non-negotiable. It's worth the monthly payment. It's worth the installation, and that's for multiple reasons. With these co-living houses, you can have rapid turnover. Okay, so if you have to send a locksmith out every time somebody moves out, that's a huge expense. Plus, you have to wait for the locksmith to have availability, right? So that gives each room convenience so that the property manager, Amanda, she can, somebody's moving out, she can send a cleaning crew and just change the code remotely, right? Um, it provides security, so it makes people in their own room feel like they're more secure, right? It makes turns easier. It's much more convenient also. So like if your tenant loses their key, you got to schlep out there, or your property manager schlepped out there for a fee to change the locks or to give them a spare key. Whereas with this, if they lose their key, if they forget their code, you can just give them a new code, or you can tell them the code, or change it. It's not a big deal. Hugely important. Now, the other thing that Vivint does is it has the security cameras. So in Maryland, you're allowed to have cameras. I think it's probably like this in most states. You're allowed to have cameras in common areas. So I put a camera in the main common area, like the kitchen, and which can see sort of the common area. And then there's a cameras on the front and back of the house to keep away the junkies. Junkies don't like cameras. In Baltimore, the junkies are harmless. It's the dealers that are a problem, and as long as you don't take their heroin, they leave you alone. But the junkies, they just can make a mess. Like for example, this house before we moved in, they were using the hose, so we had to shut off the hose because they were using it for water, and that was driving up the water bills. But security is actually something that you think that it's Big Brother, but actually most of the tenants like security. They like the cameras, both on the outside and on the inside, because it provides them some sort of protection, safety. It also helps with conflict resolution, right? Like if there's a conflict about something, you can look at the camera. If somebody claims somebody did something or whatever, you can use the cameras as conflict resolution. Oh, by the way, cameras also because sorry, you're gonna go pad split is like Airbnb in this way, is that if a tenant complains, or if you have a complaint against a tenant and you need to, file a claim or something, the camera is the only evidence that you have. Okay, so then pad splits or co-living in general needs furniture, right? You don't need to furnish the house like an Airbnb, but we put in each room, it needs a bed, a little desk, like you see that little desk up in the top left. It's not anything super fancy. A desk, an end table. We put some wall stuff too to make it nice, and you need linens. So that sounds pretty simple until you realize that um, sometimes it's difficult to set this up logistically, especially if you're remote. Because think about it, we're buying all this stuff on Amazon, right? It needs to be assembled, delivered, and assembled, right? So that's not so easy. So like I don't have time to have all this furniture delivered to my house, me assemble it and then deliver it, right? And then also all this stuff doesn't come at the same time, and I can't deliver it to the house because nobody's there, right? So what we did was we got a local moving and storage company that has storage space, and we paid them. It was not cheap, but it was worth it because I didn't have really another option. And then what they'll do is then you can create a business account on Amazon so that you can schedule a delivery all at the same time or something. Or what we did for them is we just ordered everything by Amazon, and then they just waited till it all got there, and then we picked a delivery date. The smart locks were on. We gave them the code. They went in, they delivered, like they put all the furniture in, they assembled everything, they cleaned out all the garbage, and then the property manager went in and then set the beds and put up the stuff on the wall and stuff like that. And so those little touches are very important, little decorations, um, to make it not feel like it's just a slum, like you want people to feel like this is a nice place. For a couple reasons. One is they're more likely to stay. They're more likely to stay longer, and they're more likely to take care of it. I think people take care of something if it looks. They're more likely to take care of it and treat it well. Okay, so remember, don't forget after everything's set up, you have to turn on the utilities, the internet, make sure the house is clean, double check that the appliances work, and then check your listing, and then you're ready to go. And then all this time, you set up an account on PadSplit, and then you can start. Once you get everything details, you take professional photos, right? And then the photos are worth the money because again, that's what people are going to look at. Good photos will get you good tenants, right? The app allows you to monitor messages. So even though the property manager gets all the messages, I can see that there's stuff going on, and then she's taking care of everything. Okay, that's it. Let me stop the share here. Everybody has the last chance if you want to do that QR code. So let me stop the share. Okay. All right. Any questions? No? Let me see. Okay, so I'm going to put in the chat here this my underwriting spreadsheet. So yeah, so the linens, yeah, so we supply like one set of linens, We don't, we that's sometimes people don't do that and people bring their own sheets and linens, but we'll do like one set for everybody, you know what I mean? Just so like you can see it looks much nicer for the pictures. It helps if people are just moving in and they don't have time to yet to go to the store. And then, so I just think it's a nice thing to do. It's not, this is not like, we're not doing like whatever, 1,000 thread count or whatever, Egyptian cotton, but it's something to get people started. So yeah, it, good. Any other questions? What I will do is, let's see. I'm going to stay on, and anybody who has any questions can ask. Otherwise, thanks for listening. I'm going to, if you drop your emails in the chat, I will send you the link to this, and you can also see that you can check out the YouTube channel. I can give you the Blink account um, if you have any questions, so that you can reach out to me if you have any questions. Okay. Here's the link. I'm putting the link now for that QR code that I had, that same one. If anybody wants to. Okay, cool. Any specific question? Anybody looking at a deal right now, or just kind of just in the market? Oh, Ella, you can ask.
Yeah, can you hear me?
Yeah, go ahead. I can hear you. Oh, wait. Hold on a second. I can't hear you anymore.
Can you hear me?
Yeah.
Okay. I said I was looking at a property today, but it's like it's been completely gutted
Uh-huh.
and I think the comps around the area are about 475, 450. Um the seller is asking for 239. I'm hoping I can get it to like 215.
Mm-hmm.
I think the whole rehab will probably cost about nothing, maybe between 90 and 100. So at the end of the day, I would like to keep the property and probably turn it into a pad split. Is that a bad idea? Or just look for another property that doesn't need that much work? And
I mean, it depends, right? Because it depends on how you're going to get long-term financing, right?
mm,
Because if you want to do like a burr,
yes.
then you have to make sure that after all of your rehab, it's going to be it's going to be 75 it's going to be 75% of the actual ARV, right? Like you want your investment to be 75% of what it's worth because that's all the bank's going to give you,
Okay.
right?
So
And
so
that's
it's
true for anytime you're going to do a burr like that. You're going to have to make sure that the bank's only going to give you 75% if you're lucky, sometimes 70 or 65 depending on the credit scores and all that stuff. So if you're only going to get 70%, you have to make sure that after you do everything in, otherwise unless you have the funds to leave a little bit money in, right?
I was speaking to Abraham Gray and he said get a DSCR
Right.
loan. Yeah.
You can, but again, they'll only give you sort of a certain
75%.
percentage. Nobody's giving you
Okay.
100% of the value. So if your total investment is going to be what the ARV is, you're only
Mhm.
getting, you only get 80% of that ARV from the DSCR banks.
Okay.
I mean, if you're going to sell it, it doesn't matter.
Okay.
But then you're
So
not going to make any money if it's you know the spread is what matters.
okay. Well, do you typically go do if you're considering a pad split, do you typically go for properties that, require serious rehab or
I don't no I don't want to do serious rehab.
okay.
Yeah, no. Um, I'm buying these creative deals like the ones I got. Like the ones I've got, the rehab. This rehab was like 9,000 to put up the walls. The one in Denver is going to be probably like 30
Okay.
because that one needed. We were installing a bathroom
Okay.
um, to make it an extra bathroom, which was valuable.
Okay.
Um, okay, so any other questions for you? Okay, Bill Stuart asked a question. Okay, so my walls are not removable per se, you know what I mean? But if you're putting up a non-load bearing internal wall, right? Taking it down is not so difficult, right? You just have to essentially knock it down and then you can patch the ceiling, right? Because it's not it's on like there's it's on like vinyl like the LVP flooring and so you can replace the planks and stuff like that. So it's not. I don't know how you would install. I guess I'm sure there's probably a way to install removable walls. They asked if the and so these ones are not. But I probably don't have any plans to. This one I have it as a sub two at a 5% rate. So the reason I think Stuart you're asking that question is because if you ever have to resell the house, then a bank is not going to give you a appraisal as a 6 bedroom house. When you go from a 4 bedroom to a 6 bedroom, it doesn't increase the value according to the banks because you didn't really add real bedrooms, right? Um, if you add a bathroom, that's different, but so you didn't really add real bedrooms, so you're not going to get the appraisal that you want. So you probably, if you sell it or if you're going to refinance it or whatever, you got to take down the walls and then get the appraisal and stuff like that. A lot of people, what they'll do is if they do a rehab, like if they do a real rehab, they'll do it in stages. They'll do the rehab, they'll get their appraisal, and they'll get their financing, and then they'll do a second stage where they add the extra walls. And so that's why people do that. And my PMLs are long term, right? Because I have a relationship with people. That's what, and so I think one of them is a 7 year balloon. For the that's for one of them I did as an equity partnership, so we're in it together for until we sell, or I guess we can one of us can buy the other one out. The other ones are PMLs are they're sort of long term. They didn't give me a balloon. And the average entry for these projects, I think, is probably between 50 and 100 for the creative deals. Um, and so if it doesn't if it doesn't work with a PML, I'll try to make it. I'll try to do it as an equity partnership, where I'll give people equity in exchange for giving me a lower rate to make the spread work. Um, so that's how I take care of that. Okay, Yolanda has a question.
Hi.
Hi.
So when you are putting up these walls, are you permitting this stuff or
You can. I this one I didn't take the I didn't permit these three walls I put up, which is a bit of a gamble. Worst case scenario, because the delays, I felt like the delays in the permitting, getting the permitting, and the costs would have been more than it would cost me to take the walls down if somebody called the city on me. Right? Does that make sense?
it
Right?
does?
Yeah, so I sort of it was a calculated risk. And since it's Baltimore, I'd have to like bribe people to get my permits done in a timely manner. So this way, maybe I can bribe them to not notice the walls. I don't know.
But then of course if you have to resell the property, of course then you go in and take the walls down and everything and then
I'm
you'd
taking
have
those
the
down
permit.
anyways, right? Yeah, if I have to resell the property, I'm taking the walls down anyway. So that's not a big deal, right? Like for example, in the Denver property, we were permitting the bathroom, so we got permits for the bathroom, but we didn't get permits for the walls for the same reason, because of the delays and the costs, and because if we sell the house, we're taking the walls down anyways, or the risk is that one of the tenants is gonna like report you to the city. That's the big risk. Um, but
How's he gonna know you didn't permit it?
yeah, I listen. In Baltimore, they're very very crafty, and so I don't know. They'd have to look up the permits
I
from the city. I
know.
don't know what they would do. I mean, it's kind of obvious. Like I don't know. I don't know. Like I said, it's a risk, but I didn't think it was a huge risk.
So what happens if they find out that you um what's the consequences for
They'd
from
make
the
me take down
city?
the walls.
Okay. But of course we're permitting all bathrooms.
I mean, so the way I do it is thing like this: like anything which anything which would be really expensive to undo, right?
Needs to be permitted.
I'm guessing. I mean, it depends on your city and the risk and like whatever. You know what I
Well,
mean?
I'm in Georgia.
I don't know. You have to know like sort of Georgia, right? This is the contractors will tell you. You know what I mean? The contractors know
Yeah,
stuff like this.
got you.
That's I don't know. That's sort of the way I've been approaching it. Um, because the big risk with unpermitted things is that the city's going to come and they're going to make you tear the whole thing down. So I was like, well, if they make me tear it down, it's not going to be like it would be not so bad if it's just walls. You know what I mean?
Well, here I almost believe that they just make you pay taxes on the upgrade. Like if it was a 3.2 and you made it a 4.3,
Uh
then
huh.
throughout the year you would have to just pay those taxes. You'd have to go back and pay those taxes. They slap you with a fine. Exactly.
Right. You might get a fine. Yeah. So that's the risk you take. Yeah.
Okay.
So I
Thank
don't know.
you.
It's I'm having a hard time sharing that. I'm trying to share this. The spreadsheet didn't work, so I'm trying to share it again. Um, so yeah, so these are the sort of it's like a calculated gamble. I guess I would say that's how I would think about it. let's see. I'm trying to maybe I'll just send this. Yeah. Oh, you got it? Okay, Bill got it. Okay, it worked. Okay, good. Any other questions? Pad split, you also have to be careful. Oh, Shawnee has a question.
Sorry, I was sparing you guys of watching me eating. Um, so do you have to get like a rental license of some sort? And if so, like,
Yeah, you get a regular rental license. So here's the thing with pad split, which is interesting. I don't know how this seems to fly. The people at pad split's lawyers say it works, is that in essence, it's not rent by the room. Okay. What you're doing is you're renting the house to pad split. Pad split is your sole tenant. And pad split doesn't have tenants, they have members. Okay. So pad split as the sole tenant will allow its members access to the house. Okay. That's the way they do it. And so, for example, the nightmare house that I'm going to eventually turn into a pad split if I can ever get this guy out of it is it's zoned for no more than 4 people, but it's a beautiful pad split because it's got 6 rooms and 4 of them have their own bathrooms and don't have to do any rehab. And so it would be a problem with the city zoning to put 6 people there. Okay. But I'm going to take my chances, again, calculated gamble, take my chances and say, well, they'll have to deal with, I can challenge it and say, I don't know what I would do.
so that gets around the, you can't have more than 2 unrelated people in the house in
I
the
think
city.
it does. They claim it does. They said their lawyers say it does.
Mhm.
We'll see.
Just FYI, go over into the county line. You don't have that problem.
Yeah, if it was that easy, right? You know what I mean?
Yeah, if you're just like right on the other side, I mean.
Yeah, great. Like, yeah, those houses are gold, like the ones that are like just on the other side of the line. Yeah, I don't know. Somebody needs to drop a bomb on Baltimore City and just invade.
So
Can we invade? Can the county invade the city? Is that allowed?
I'm telling you, it's like the taxes on one side of the line and then they double or triple as soon as you go over the line into the city. It's crazy.
Twice the taxes and half the services.
Right. So what do you do about like rental licensing if you're going to do a co-living and not use pad split? Do you just get a regular license or?
Well, in Baltimore, you can get a co-living license. They have
Oh.
licenses. Yeah. It's just there's like it's weird. Like there's parts of the city where they don't allow it for
Hmm.
zoning.
Okay.
So that's something to know is that you have to make sure that in the city that you're looking at that's allowed, right? And also like you have to know what it is. Like I spoke with somebody who does co-living in Dallas,
Mm-hmm.
Fort Worth, and it's like they're like militant there about not allowing it, right?
Cool.
They I mean they patrol, like the city patrols the streets looking for a lot of cars parked, and they and like you can report your neighbors or something if you see like that sort of thing, and they're constantly looking to shut these things down. So yeah, so it's like you have to know. That's why I said like speaking to a property manager in the market is so important because they'll know those things. You know what I mean? The wholesalers are always going to tell you, "Oh, this works as a pad split. It's a great pad split opportunity, right? This is a great short-term rental. This is a great whatever." They'll tell you that as an exit strategy, and that's because they don't have to deal with it after the fact. They get their assignment and they're on their way, right?
Right.
Wholesaling is the prostitution of real estate investing. It's like wham bam, thank you, ma'am. Leave your money in the counter and then you're out, right? And so right? And so
Yep.
and so that's
That or
fine.
your
But then
drugs.
listen, I'm married 20 years. I'm into long-term relationships here. Like, so I want to long-term invest, right? Because the real wealth comes from building equity over time. And so, but I got to be sure that I don't run into problems. I've learned this all the hard way. And so, and it's really a hard way to learn. So if you learn, if you have to make sure that your market's good for it, that you have a good property manager that can take care of all these things, not just that they actually do it. You know what I mean? Bill, I think it's all of DFW from what he was saying. It's a problem in DFW.
I'm
Like,
wondering if it's all over Texas.
I don't know. It's not everywhere in Texas. It may be, I think, but it's like a lot of Texas, like it's a problem in Texas, which is weird because, it's like, don't mess with Texas, like the free states, like, I don't know why there's not like I don't know, the
Is it co-living they're against, or is it just
short-term rentals also, they've
having
been
flop
issues.
houses or
It's
something that
it's
they're
co-living. It's co-living. I don't know. And I get it. Like, it's also important to pick the right neighborhood, right? So, for example, in my neighborhood, if like a co-living was next door, I would not be happy, right? If there's
right?
6 cars out front, if it's blocking the streets, I would not be happy. It was a short-term rental, right? Because there's parties and people constantly going in and out, right? And
Mhm.
so you want to make sure that the neighborhood is good for it. You know what I mean? Right? So cities are fine because nobody cares in cities, right? More urban areas, like nobody cares about that kind of stuff. But you have to make sure there's parking for some time. Like, in Baltimore, you need like, it's like you need enough parking for usually half the house, but you also need to be close to public transportation. With that, that's part of the problem in Texas is that it's like everything's so spread out and everybody drives a giant truck. I don't know about that part, but they
Except
drive,
for Houston.
you get it, like this parking goes up really fast, like your F-150 takes a lot of space, and especially when we have 6 of those in the front of the house, you know what I mean? And so, um, and so that's like, yeah, that's one of the things you kind of have to know about the market. Like, and that's one of the things that you will see if a local like I spoke with a property manager in Dallas Fort Worth, and he told me all these things, and he's still making it happen because he's taking a calculated risk, and his investors know that, and so he's sort of extremely selective about where he puts these things so that it's not going to cause the neighbors to notice and it's not going to make a stink. He also like puts the parking in the back, and like he's got all kinds of, I was like, I don't want to deal with that. There's plenty of other markets.
Yeah. Yeah, kind of. Houston has 3 beltways. It's about the size of like 2 or 3 Baltimores.
Yeah. Texas is
I was
terrible.
looking
Just
at
no offense. I'm
properties
just
over
kidding.
there.
Some people, maybe it might be true, but that might be true because some people like it. I don't know. You'd have to know that, right? Like that's the thing you'd have to know. You know what I mean? And that could be neighborhood by neighborhood, street by street. Um, but I would be very cautious about just assuming because the wholesaler says it works as a pad split, right? And even if it's a
Yeah,
pad split
wholesalers are
market,
liars. Didn't Pace make that evidently clear? He said wholesalers are liar. I know because I was one.
yeah, yeah, yes, yeah. I would say they're fibbers. You know what I mean? They're not like outright liars. They're exaggerators.
Exaggerators,
They're
right?
they're overly optimistic about exit strategies and profit margins.
Mhm.
So okay, good. I'm gonna
Very well,
sign
thanks.
off. I got stuff to do. Yeah, and check it out. Like if you guys have questions, and maybe I'll put some updates on the YouTube about how things are going. Um, but yeah, so I forgot to say that this house was fully occupied in like 6 weeks. So June, like the way pad split works, they take the first 10 days. So I should be getting my full, like the full estimated profit by the end by January is going to be our first full month. So, and God willing, there will be many more. All right, guys, stay warm. No, you guys are already warm. Okay, whatever. I'm gonna try to stay warm.